Hey guys, it's Will here. I'm going to do a video as I usually do on the markets, and today I'm going to talk about how to find the best, strongest ETFs or stocks or whatever you want to look at. There's different ways you can screen for stocks. You might want to find things that are breaking out above the 50-day or in an uptrend or certain indicators. But we're going to look at things that are have a 52-week high, so there's relatively open space. There's not a lot of resistance for the last year, and we're also going to look at the most gains on different time frames. So year to date, 90-day, 30-day, and even 5-day to find the strongest, say, top 5 ETFs, and then I could talk a little bit about stocks as well. So you can use this way for anything. I'll do a quick market update as I usually do before. If you look at NASDAQ, I mentioned this previously. I haven't done a video for a week, I think, but we're still in an uptrend. So what I do when I look at these things is I'm looking at higher lows. You can see each time it pulls back, there's a new higher low, and there's one right here. There's different ways you could look at this, but there's a 21 exponential moving average, this black line. There's a 34 exponential is the orange 50-day. So you can just stick with moving averages for uptrends if you want. So as I said before, the NASDAQ looked good. It was still going up, even though it seemed extended. It had a few pullbacks to the 21, but it's still heading upward. S&P, same situation. So pullbacks to the low points, moving averages, is a good entry point. Like as far as, I like to see it starting to go back up again, but because when you're buying up here, it's a bit extended, obviously. Dow Jones, a little bit flatter, but starting to break about this little wedge pattern here, little downtrend here. But we've hit a sort of a peak quite a few times, but we did bounce off the 50. So the other thing down here, you see I have this relative strength. So the relative strength compared to NASDAQ is low, obviously. It's in a downtrend, so it's NASDAQ is doing much better. But at some point you expect to see a broadening out of markets, which is it has been happening to some extent. IWM did well recently. It's got higher lows here. It's above the 50, above the 21 EMA as well. If you look at the VIX, which is a volatility index, it continues to go down. There's little blips here and there, but continues to go down below the 21 EMA. The dollar, it did reach a certain point where it bounced at this recent support, but it's been in this downtrend recently and sort of in a sideways movement here. So once you see the NASDAQ and that markets are looking pretty good, what you can do with TC2000. So I should mention, if you want to pick up a free trial or $25 off subscription, a monthly subscription, check out the link in the description below. I love TC2000. I use it all the time, every day. Even on the weekends, I do some stuff. I plan and do some watch lists and stuff. So what you can do is click on watch lists. If you don't have any, there's some up here and a whole bunch of things here. US, you can look at ETFs, US stocks, NASDAQ, specifically S&P or Dow. But if you go to personal, you can start to create your own watch lists. So I have one called US sector ETFs where I've sort of filtered out, because sectors will have, US ETFs will have leveraged ETFs and ETFs with hardly any volume. So what I try to do is pick a variety of ETFs in different sectors. So that's oil and gas, there's cloud computing, Bitcoin, crypto, gold, lithium, all sorts of things like that. So So what you do there is you click on this filter button, and there's a checkbox, and then it says no conditions. And from there, you can add your criteria. So if you click on this plus button and do a true false, that gives you the condition section. So if you type in here 52, you see this 52-week high. That's what I created. But you can pick pre-built ones as well. So I already have that condition, and I've created, once you have a watch list, let's say, before I just jump to it, there's this little button here, move window, and you can move it and say move, and then you pick which section you want to. So I'll do it on the left side and put a tab either up here or down there so that I have multiple tabs. You hit escape if you want to cancel that. So you can see up here I've got 52-week high. So from here I've got a scan which shows all the ETFs that have 52-week highs. You don't have to do that, but that's just one way to find things that are kind of in the clear. So if you look at this, you'll see for quite a long time, there's no resistance, generally speaking, from previous highs, at least not within the last year. And from here, what you can do is sort by year to date. So then I look at the top 5 ETFs in that range. So this is the strongest ones for the last year. So you have Bitcoin, ETF, GBDC. You have the FANG stocks, which is like Amazon and Google, Microsoft. Then you have the ARK ones, which are starting to do really good. They've been beaten down pretty bad, but they're starting to come back. You see how they flattened out, and now they're starting to go up above the 200 and the 50. And if you click on this component watch list button, right beside the name of the stock, or next to the ETF, you can see all the stocks, and that's where I was getting at. I'll do that later when I get into the stocks. So if you click on 90-day, you're going to have different leaders within, so short-term leaders, and then eventually they'll turn into longer-term leaders. So if you sort by 90-day, you can look at those ones, and you have like ITB and SMH, which is the housing and the semiconductors. And then if you do 30-day, you get a little bit different stocks, or ETFs. You'll see different ones pop in, and if you do 5-day, you'll see W Cloud, let's say. And that's if you want the 52-week high criteria. If I go to the sectors, which are not filtered by that, and I do 50-day, I see SIL-J, which is, it doesn't have a 52-week high, so you could avoid that one if you wanted. But it's had a pop recently, and hydrogen is also had a pop. But you see, these are in quite a downtrend here. So one criteria would be to avoid those two because, they're not in they don't have 52-week highs. iBuy is another one, but it is very close, but it doesn't have, it's pulling out of this situation. So what I did was I created a spreadsheet, and I put the top 5 ETFs from just the sectors. I didn't do 52-week high. And I noted that, and this is year to date, 90, 30, and 5. And then I noticed that basically there's new ones that showed up in the shorter durations. So if you're going to buy those because they're strong within the last 90 days, you could put a percentage of each into each duration. So for example, I put here 50% in the year-to-date ones. Now these ones are still in the other criteria, so you wouldn't count those. So if you put 50% of your funds, or if one of your accounts, into this year-to-date, then you wouldn't put more into it if it's in the 90-day. But if there are new ones like ITB, SMH, and ARK, you could put like 20%, 20% to 30-day, and then 10% for 5-day, let's say. The 5-day is obviously short term. It might not even be an established uptrend yet. So you figure out what allocation you want to apply to the different durations. And then if they move into the longer term, you can add more to them. But that's just a division, figuring out, the strongest ETFs that you want. And this will give you 10 or 15, assets to own, I guess. So you could decide, you don't want to do the 5-day, that's too short. You could change the percentage, how much you want to put, maybe 10%, 30%, and 60%, or something like that. You'll have to decide how you want to allocate the different percentages. But you also want to look at the stock or ETF in terms of its. Let's just pick an example. Like iBuy. This is quite extended right here, so you want to try to get them at these pullbacks. So you don't just jump in like right. It depends when you see the percentage entering that top 5 criteria. But you still want to look for like a proper entry point. So, this is a bit obviously extended. If you do pie up here, you'd use maybe a volatility stop as your stop, or somewhere just below that. But these ones have extended quite a bit. Hydrogen, a similar situation. So it kind of puts something on your radar, but you still want to make sure you find the right entry point. If we go back to ARC and click on the component watch list, we can also filter this by a 52-week high, for example, and that would give you Shopify, so you can see how it's up there, Exact Sciences, and Teradyne. So those would be if you want to do that. If you don't want to do the 52-week high, or you want to use 52-week high and also find the strongest stocks, or strongest stocks, based on the criteria we used before for the ETFs, the year-to-date, 90-day, then you can have, if you don't want to use the 52-week high criteria, you can use the year-to-date. So right now I've got it sorted by year-to-date, and that gives you Coinbase. So these, Meta is Facebook, obviously, that's in a nice steady uptrend. Palantir, Tesla, Shopify. So you do the same criteria we did before, the same method. Pick the top 5, 90 days. You get the similar ones. So you're going to see Coinbase, Palantir, Meta, Shopify. But then you have all of a sudden Pack B. So if this continues to outperform, it'll eventually be one of the top 5 year-to-dates, and then same thing for 30 days. That'll shift into 90 days, etc. So it probably makes sense to have, if you want to do it this way, more allocation to longer successful ETFs. So so 5-day, you could have a smaller percentage, just start getting in. Then once you see it go to 30-day, 90, you could start to increase the percentage of that. But you also need to look at strategic entry points. So if I go back to the ETFs, if you look at iBuy, for example, you could buy here, but this is quite a bit off of the 21 EMA. So see how it pulls back to the 21 EMA. So when you get a pullback to some, it doesn't always go down to 21 EMA. So that's why I say, if you buy these, if you use the volatility stops, you could stay in it all the way up to here. But it does also sometimes go red, even though you haven't reached the 21 EMA. You'll get, based on volatility, you'll get a red V stop. And but you can always get right back in again. Like if you get out and then get back in, that's possible. Sometimes you get churned in and out, but SILJ is another recent one. So it broke out here. It doesn't mean because it's in this 5-day that you buy it right away. It's something to keep your eye on, like as far as these are strong current issues, so that strong breakouts. And that means that you might want to wait for a pullback. You can buy, at any point and just stay in if it's in an uptrend and green volatility stops. But sometimes, this might be too early. You want to wait to pull back a bit, and especially like you got a 200-day moving average here, but there's no perfect solutions. There's no perfect scenario. It's a probability situation. So from past experience, if you buy after a pullback and start to see strength again in an uptrend, that's ideal. So you have higher lows established. Sometimes a double top or double bottom is good, or close to a double bottom is like a return to the original support. But that's kind of the methodology that I wanted to talk about today, because sometimes you get caught up in the charts and looking for breakouts and that, but you're dealing with things that aren't going to do that great. They're not, they're not in a strong position. You might be trying to catch the bottom of something that's been dropping a lot. That can be tricky and dicey. So sometimes 52-week highs can focus you on the strong stocks or ETFs, and also the focusing on the top 5 or 10, year-to-date or 30-day performance allows you to focus on things like home builders and RK and even iDrive, which is the vehicles. Hope that helps. Don't forget you can get TC2000 free trial or $25 off if you decide to purchase a subscription by checking out the link in the description below the video. Thanks to everybody who's already picked it up. I hope you're enjoying it. I've been using this for quite a few years, and it's a great way to scan and have all your stuff organized. So hope you like that, and we'll talk to you next video.